So that's what I was trying to. Okay, so I was kind of like, that's what I was looking for because I somebody had his course for a long time. I haven't looked at it, and somebody's like, "Yo, I need you to go through this," and I was like, let me think about it. And then I was like, after a year or so, I was like, you know what? Maybe I should like go through it because I was just busy doing other shit. But I'm like, let's if we went through stuff and then started, kind of like the new thing I'm doing this new year is going to be where because everybody there's so many different styles or ways to trade, and you got people with Elliott waves, and you got people with gamma fans and all this shit. And
Yeah.
what I realize is that at the end of the day, 99% of the people, no matter what, probably 99.9, they're going to mention somewhere in there support and resistance, or at least Fibonacci's,
Yeah. Hundred
right?
percent.
100%, right? So I was like, you know what? Maybe I should just teach the basics, like cover the fundamentals of what we're all looking at. And then whatever they learned or whatever they, how they trade or how they make their decision, just show them how to make their decision better. So that way,
Yeah.
you're not really changing anything that you're doing where you have to kind of be like, I just can't figure this shit out. But to where you're like, oh, okay, that I get that. That I can just do this, and it makes me like having rules. Like instead of losing those 4 or 5 trades, doing one thing different so that you don't get in that losing trade or
Yeah. Yeah.
enter properly based on how you trade. So that's what I'm getting into now. Is kind of like, it's like let's just teach people based off what they understand, and then we'll go from that level, right? So this is where this is Doge, and you can see here we have a couple different things. And another thing I wanted to show people is that a lot of times people will be talking about more like patterns, right? And I try to explain to people like patterns are only about 57 to 62% accurate.
Yeah.
So if you're trading a pattern, most of the time it's going to do what it's supposed to do, but it's a coin flip, it's 50, 60%. That's not really, I like doing something that has a 70% and above, something
Yeah.
that you know what I'm saying? Like I need the odds in my favor.
Yeah.
So that's when I was like, you know what? Maybe that's why I started thinking maybe showing people how to actually trade a bull pennant, right? Because everyone does the same thing. You pull up a bull pennant, and this is, even on Trading View, you pull up a pennant, and the pennant's going to go, oh, boop, boop, there's a bull pennant, right? And then all of a sudden, it'll pull out a target. And then everyone's like, okay, I'm in this trade, I'm going long on this bull pennant. And this is where the problem happens, right? Because 95% of people fail at trading.
Yeah.
And it's,
Real quick.
go
Kelvin
ahead.
tells us that like when there's a bull flag or bull pennant, the target is typically the size of the flag pole.
Yeah, I mean, so okay, so yeah, yes, theoretically, right? What they're trying to say is that this push down here, and we'll measure it out to the top of there is about 10%. So their mark is at
Yeah.
the end of the pennant should be the same thing, about 10%.
Yeah. Yeah. It's
Yeah.
about that.
So that's the fundamentals of the flagpole, just like on the Elliott waves. The Elliott waves are basically the wave one. Normally, wave two is at least 50% of wave one, up to 80%. And then wave three is typically the longest wave. Those
Yep.
are the fundamentals of the 1, 2, 3 wave of the Elliott, right? And this is what I mean. This is information like everyone's out there. These are basic things that everybody's learning and what everybody's kind of putting in their head. And, this is where I feel like and this is where I think that trading has so many people lose their houses and their money is because it's not that it didn't do what you thought it would do. It just didn't do it when you thought it would.
Yeah.
And because of that, you don't go, damn, I lost 5,000. You just see that it went down and you lost 5,000. Then it went up and you're like, man, if I would have got in there, right? So
Yeah. Yeah.
you're always convincing yourself that you were right. You just were wrong time. You know what I mean? Right trade, wrong time, right? Which kind of brings us back to what I was talking about. That's why having the the wave setup where it's always the same thing is where you support resistance, etc., etc. And that's kind of why everybody is always talking the same thing. So when you do like something, and this is why when I look at charting and I see everyone on TikTok and everyone's drawing lines and like, look, I can chart. And I'm like, yeah, but charting's not trading. Right? And I think that's where the big discrepancy is that everyone thinks that charting is trading. That's not trading. Trading is a skill, right? A skill where you understand probabilities and percentages better than everyone else. So when you see it, you can calculate a strategy that actually makes money in a particular circumstance. Does that make sense? So, for instance,
that's making sense.
yeah. So, for instance, if I did this in Calvin Hill style, I would say, okay, guys, here's what's going to happen. Normally he'll go to a daily, but normally you could just go to a 4-hour chart, and he would put a line here, and he'd say, okay, we know down here we got this bottom support here, and you come across, and we'll make this a little bit bigger, and we'll turn these. Let's see. We'll make these support lines orange. And you got your bottom support, then you have some resistance and support up here. We'll do these 4, we'll make them orange, right? And then these are the basics. Here's your bottom support area, right? Here's where it touched before. You can see here we touched over here. And then the top area, the middle support, we have here. We have a little bit of support. And then you have your channel, right? So he'll take his channel and basically we'll channel out a couple things here. And you can take any type of parallel channel. And all this really is doing is, so if you take a parallel channel, go to the top here, come down, you say, okay, if it's going to break this channel, right, eventually as it comes down, right now, he's basically charting that this is a downtrend. Because here's the top, here's a lower high, lower high, lower high, right, lower low. And he goes, when it breaks out of here, this is where, I'm going to make a decision that there's going to be a trade here, right? So now the problem is when you first start this chart, right, which is kind of like way up here, if you put your channel in at the top of that and then you watch it come down, it originally breaks through right here. Now when it comes down to retest, it happens to retest on a support line that we're starting to develop, which had a previous area over here. So support, resistance. And what these really are, what people don't understand, I guess it's the philosophy of how you think of it. These are targets, okay? They're not support and resistance. What they are they're actually targets and markers of where money and sales and buys were made for profits at the previous moves. So they become areas where retail investors take over as being the places of support or resistance. Now, how did it get there? What I mean by that is if you're trading with a particular, let's say if you're a market maker, right? The market makers basically let something fall until they see what's called volume, right? And you can see here, there was a time that this caught a little bit of volume. There was a spike, and then the people who were holding finally dumped, right? And that's what they're waiting for. They're waiting for the people who are holding to get out because they need a full bottom, right? And this is where you see this little bottom piece right here. So what I'm going to do here is I'm going to take this line here and take this bottom. Now, when this starts to move up, this is the peak here, right? So if we measure this out and we say, okay, from this level here, we're looking at an 88% move, okay? Now, most of the time, what market makers are looking for, they're looking for a 30% move right here. So you see how they came up this arrow the first time? I'll make this a little bigger for you.
Yeah, I saw you put that in your Discord.
Yeah, and you'll see how it pops up here 30%, right? And right when it got to here, you could see the sales start to come in, right? And then it fell. But what happened is when it fell, the market makers could see that retail kept buying and buying, and they kept the volume sideways. So then they came back and realized, okay, from the previous support areas that we were selling at, the price that we were selling at, we have a support area up here and here, right? that we could look for and go to in these areas, right? And they already know that most people, they've already been conditioned to use those as targets, going, okay, if I buy the support down here, the target is the resistance up here. You see what I'm saying? So when this pulls back here, you go for another move here. This happens to be another 30% move, you see? Once those 30% moves hit, that's when the market makers are done with their money and they get out. That's why you'll see these type of correlations where we get things that are called double tops, triple tops. You see bang, bang, bang. And retail keeps buying and it bang. It never seems to break that. And they're like, oh, that's resistance. No, that was just a target, right? So once a target is hit, what do you need? You need the bottom level to come back in order to restart this target. So what that means is two areas that we had that were buy zones, and I'll turn this into a 4 and we'll make it green. And this is a buy area that triggered for the second 30%. And then down here, we'll turn it green. Or actually, let me go blue. So what's a good color you can see on the TV? Let's go orange. Okay, orange and orange. So this is the first buy zone. It triggered 30. And then this is the second buy zone. It triggered another 30. So what happens is, once the big money's out of here, because they've already hit it twice, there has to be a pullback to these levels, right? So in between there, you have all these people that are fighting these little areas, and everywhere you see a support zone that was previous there, right? So in this area, you can see there was resistance here before it broke out. And what happens is people, retail investors, will take this area and they'll say, and I'll make this one yellow, they'll think to themselves that, okay, this is where I'm going to put my limit orders, because when this comes down, it's going to hit here, right? So that's why when you see these levels get hit, you see spikes in the chart, is because it's a bunch of retail investors putting limit orders where they shouldn't be. So you get all this weird macro movement until eventually everyone sells off and goes, well, there's not enough money to break. And then all of a sudden, boom, you hit this lower level here. And then that level tries to hold and it's like, boom, to the next support. And then you have all the other people that put their buy here, which causes spike again, right? Which is what we get right here. And then once it hits that, comes back down, hits support, drags along. You see, notice there's no spikes in that sideways support. And then people are like, oh shit, there ain't no money. And then they dump again, next support, and then finally we're back down to the bottom, right? So when you understand that there's going to be bounces because retail investors are going to put their limit orders in support areas, right? You're going to see spikes. So sometimes when people ask me, when I'm shorting, where do I know to take profits? Well, you take profits on the next support line because there's going to be a bounce. And then after that bounce, you reshort again so that you can get the next pull down. You see what I'm saying?
Yeah.
And the way to think of it is like a two-wave theory of the Elliott wave. You want one pull down, a bounce, pull down again, and then you're like, okay, I'm out of this trade until it finds some type of support where it starts to, rebuild. And we can see here, it comes up, hits the resistance, comes down, resistance, comes down, resistance, and then all of a sudden, it comes down, and you can see it breaking resistance, comes down, and then it retests, and then we start to get this movement up. Now, the thing about this is when you see it break, you have to make a decision here, and the decision is, whether you think this is going to be a move up or it's not, right? And this is why I talk about charting, is because like watching Calvin Hill, he can give you the support and resistance, and it looks like, and he's right, because he's like, he's showing you where these lines are going to hit. He's showing you where the support and resistance is. And that's because 99% of the people are doing what they were taught to do by the market makers, which is limit orders on the supports, looking for the bounces, right? Because think about every time you see someone trade. The very first thing a charter will tell you is that we're looking for the support to break resistance, retest, and then go up, right? It's always a retest. Like everybody wants to enter the retest. Now, the hardest thing to know is where is the retest, right? That's the first thing is like, how do I get the best retest entry, right? When do I know that that retest is the actual good one, right? And if you're not using any type of leverage, right, which is really the only way to make a lot of money, unless you're trading with, let's say you had $300,000, then, you know, if you have $300,000, just call me. I'll show you how to make $1 million a year. You don't even need leverage. You could just, you can play the basics, right? But the majority of people have to use some type of leverage, which means that you can't hold on until it actually goes the way you want, because you have a liquidation amount, right? So you're either, you know, buying in until eventually it goes the way you want, and then you get your money out. But you could get stuck there for a while. In case scenario, you end up in a crypto winter, your money could be tied up for year and a half. And some people, you know, if they're trading with 300,000, they got $1 million. They don't care. They just kept buying Bitcoin until it got to 15,000, and they kept buying, and then it went up, and they're like, oh, this is a good idea. But most people don't have, you know, $300,000 to, you know, just sit around in a market. So you have to use some type of leverage, and by using leverage, you've now created a particular rule in your trade that you must be somewhat accurate to an entry, because you have a marker that will eventually liquidate you, or you will hit a stop loss. So depending on how much you're willing to lose out of your current trade, etc. So this is all strategies. So based on strategies determines whether or not you're successful. And this is where the dilemma happens for pretty much probably 85% of the traders, is because their strategy is not correct, and they don't have a risk versus reward situation, right? That's why you hear a lot of people go, you know what, my trading's got a lot better when I learned how to risk versus reward, right?
Yeah.
And what they really basically did was figure out how to lose less so that when it does go up, they win a little more. That makes sense?
Yeah. Can I tell you what my problem is?
Yeah, go ahead.
My problem is that I haven't found a strategy that works for me. Like I'm on YouTube, I'm searching up so many different types of strategy, and then I join your Discord and I see that you use your moon indicator and how accurate your trades are, but I just don't quite understand it.
Okay.
So I'm just still struggling to find a strategy that I can use every day that kind of works for me, you know, so I can consistently do the same thing, that type of thing. I don't have that yet.
Right. Because I mean, that's everybody, right? That's kind of where the scenario is with everybody, is that at the end of the day, it's really not you, it's your strategy, right? Because every trade is successful if the strategy was correct. That's why people keep trading even though they keep losing, because you see what happens. You're like, oh, this is going to go up. Now it doesn't go up when you thought it was going to go up, but it goes up when, you know, you least expect it. But in reality, you still feel like, all right, I was right, right? So what we do here is that the moon indicator is kind of like your confirmation indicator. We designed it to do two things. One is it matches the volume that's coming in, and it lets you know when there's actual money, right? And that's the only thing that makes something go up, is volume money, right? It's, you know, sometimes with the RSI, which is RSI, people say, oh, that's the relative strength index. Really what that is that's called a sentiment, right? It tells you when people are buying or when people are not buying. But what it doesn't tell you is how much they're actually buying and not buying, because the volume is what moves it up or down. That's really what really matters, is how much money is going up and how much money is going down. So the sentiment, a lot of times when people get into trades, is a little different than, you know, the actual money, right? So all we focused on was tracking the money. So when the money actually comes in and out, we can be in a situation to take advantage of it, right? So for instance, right here on Doge, you know, and kind of like typical support and resistance. So I'll show you what I mean by this. So if you're a charter, right, which is kind of what Calvin Hill is. Calvin Hill's a charter. He can chart all these different things, and he uses very low leverage because he's not a good trader. And the reason why he uses low leverage is because if he gets in here off this support here and he's wrong, he has to buy more here. And if he's wrong, he has to buy more here. And if he's wrong, he has to buy more here. And he keeps buying until it goes this way. And then it looks like he did a really good job, because then you're by cost average buying down, you're getting at a better price, better price, and then eventually when it goes up, it only has to go back up halfway to where he originally started, or his original target, because he bought, so he kept buying down, and he still gets his 30% here, right?
Yeah, well, that's,
But
yeah,
that's
that's
just,
exactly what he does.
yeah. And everyone's like, man, that's brilliant. But that is, when we're not, I mean, I wouldn't even do that in a stock exchange. And even though those companies are real, like at any time, a company can go bankrupt, right? So the odds of it happening inside the stock exchange is like maybe 2%. But in crypto, man, we're already dealing with, you know, none of this stuff is really real. You know what I mean? At any time, they could pull this market, right? Anytime, anything can happen. So it's a very risky thing to just keep piling money, because what happens is you might start with 100, 500, 1,000, but one day you're doing 10, 15, 20, 30, 40,000. And God forbid they do pull, God forbid somebody who, is sitting around with a Satoshi Bitcoin wallet decides to say, you know what, 8 billion is enough for me, and just sells every Bitcoin. Because that market will just, I mean, you see what happened October 10th, right? I mean,
That was
people
insane,
lost
yeah.
millions, and that wasn't even bad. Like
I know.
that,
I'm sure it can get a lot worse than that.
yeah, you're way worse than that. So to put your livelihood into a strategy that is literally into a market that is kind of like, man, unpredictable. It's just, I don't I don't like those odds. So for me, it's like, this is how, what you want to do here is develop a strategy that allows you to trade with retail investors like Calvin Hill, and understand where they're buying and why they are buying, and then why these support and resistance lines exist. And then knowing that the market makers want to make 30 to 60% moves, then you'll know where the real entries, or at least have a better concept of where a market maker wants it to be. Because a market maker is not going to get in until he has the 50-50 rule. The 50-50 rule is that if he needs it to go to here, right, to make money, let's say he needs it to go here, he's going to have double that option, because he doesn't want to risk getting to his line. He wants to go past it by 100%, so that if it only does half of what he believes, they still make money. That makes sense?
Yeah, well,
So that's why when you trade, you have to be thinking the same way. You have to be saying, okay, this is where I think it's going based on the previous resistance. If it goes halfway there, how do I make money on that? See, this is how you start your strategy. How do I make money if it does half of what it's supposed to do? So I do my strategy based not on half, I do half of the half. So if something's supposed to go up here, I figure out after I go to half, I go to 25% and say, can I make money here? Meaning that
so
it,
I'm guessing that's why you use very high leverage, because it's a smaller move.
yeah. I mean, because I want to have, see, when you have risk and reward, right? Instead of trying to get the home run, I'm trying to get a base hit. But the base hit still gets me paid. So
Yeah, no,
once,
that's awesome.
right? So this is the concept of the 50-50. Go to half and then do half of half. And if you can devise a strategy that can get you paid on half of half, well, then worst case scenario, you're the champ. Best case scenario, you doubled what you thought. That makes sense? So what
Yeah,
that, just by doing that little concept there, just that little piece. This is normally, so I normally run a course, and it's the mastermind course, and people are like, man, they don't realize I'm not even teaching you how to trade. What I'm teaching you is how to understand the mentality of the trader, which is a market maker. See, it's like playing a game. We all play games, but if you don't know the hacks of the game, then you're just a victim of the game. Once you understand the hacks, then you flow differently. You know what I mean? Once you understand the behind the rules, the behind the scene rules, you tend to do a lot better. So that's why I do a mastermind course, right? So the first thing I do here is I teach, and this is free for you. I normally a mastermind course is like $5,000, but the first thing is you said it perfectly was that you're trying to find a strategy, and the reason why you haven't found one is because you haven't outlined the rules of your strategy. The rule of your strategy is, how do I make money if the trade does half of what it's supposed to do? You see what I'm saying? That's the fundamental. So now that you have the guideline, right, the outline of your goal, now you have to find a strategy that can do that. You see how that eliminates 80% of the shit that you were looking at already.
Yeah, 100%.
Right? Now we got a smaller box. Now we're in a small area going, okay, I just want the best of the best, man. I want the old New York Yankees where they just picked up every superstar in the world. So now that we got that concept, now we can start digging in here going, okay, I know support. I know resistance. I can go back and I can chart. I can see where it was. I can see where it's going to go. I can see where it should go. I can see where the lower low is. I can see the higher high. I know when it's in a channel, etc. But how do we know when this channel actually becomes important, right? And this is why when we go in here, and let me get rid of some of these indicators here so we have room. So I'm just going to get rid of this moon one. So we got a new moon indicator coming. I'll get rid of that. I don't need the RSI. Okay. So what I'm going to do here is I'm just going to take the moon indicator and simplify the movements down, right? So normally the first thing you have to do is, and I was just thinking about this the other day, is like people don't realize that time frames are important. You have to decide what time frame you're going to be trading on so that you can understand the patterns or the targets of that time frame, the levels of that time frame, where something's going to move. So that way you're not kind of like looking at a 4-hour support and resistance, then going to a 3-hour, 2-hour, and then deciding, okay, I'm going to do this 1-hour trade, but then start trading within the 5 minutes, right? Because it's way too small. You always got to have something like a 1-hour trade area, or I like the 45-minute because it's in between the 30 and the hour. So if you like to scalp, it's half decent. If you want to position trade, it at least is the foundation of the position trade for an hour trade. So for instance, the fundamentals would be taking the moon indicator, going to a higher time frame. Like for instance, right here we're on the 4-hour time frame, and on a 4-hour time frame, if I'm looking down here and let's say I'm looking to go long, right? If I'm looking down here, I'm looking at these levels. You see, these are just like candles. And these are levels of money, right? And you can see there's a line here like a -30, right? So on there's always like negative lines. So if I draw the -30 line, right? I can't, so I just need a line. Draw a line. Okay, so that's the -30 line, right? And you can see that it touches here and it touches here, right? So now, and I can see everywhere that it kind of got down there. That's just kind of like my level of exhaustion, right? Just like there's a level of exhaustion going up, which is basically when we go to the top side here, it's the same thing. There's a 30 line up here. You could draw a line up there, and that's pretty much, normally when it's buying, I like to keep it around 20, because normally it's harder to get money than it is to sell, right? And that's where people don't understand why I short more than anything, is because I'm gonna give you the juice, brother. You must be a good dude, man. Yeah. You got a good family, man? You a family guy?
Sorry, say that again?
You a big family guy?
Yeah, 100%. I'm young. I'm only 22. But,
oh, okay.
I'm trying to learn this now.
Yeah.
Help my family, get us that financial freedom.
So. Yeah. I'm a very spiritual person. So for me, when if I start teaching and then I start giving you the real shit, I always know it's supposed to be that way. You know what I'm saying? It just makes me laugh because it's like, you're always doing something, but you don't realize most of the time you're doing what he wants you to do. But so kind of like this is where, and this is my philosophy. It's very simple, and just keep this in your head. So when you're trying to go up, right, a lot of things have to happen. you have to have money come in, people have to buy, and then it has to have a push, and then it has to have FOMO, right? There's all that you have to wait for everything. There has to be like some type of news, some type of Twitter. There's always something that makes it go up. You know what I'm saying? But the beautiful thing about shorting, right, and the reason why I do all the shorts is because once it goes up, there is 100% chance that they're going to sell to take profits. So it is a guaranteed trade. The one thing I can guarantee you is that whatever coin goes up, it will come right back down. Now, what I can't guarantee is how high a coin will go up. Does that make sense? That's the beauty of crypto.
Yeah.
Is everyone's going to sell because the only reason they bought it was to sell it. Now, on the other hand, trying to make something go up, well, shit, that takes a lot of work. So that's why shorting is better. So when you master this, become a person who shorts the market more than a person that goes long, because you'll make way more money shorting. Okay, but so getting back to this here, the moon indicator, we're tracking volume here, right? And I can see that, you know, from the past, just like support and resistance, I can go back and see where all this volume was, and I can start to see where this creates ups in the chart. So if I go to the chart here and I see that the bottom indicators here, I can see where it starts to create a little bit of momentum here. You can see like how it goes up here. There's a what we call a cluster, but that would just be what's called what do they call that? A parallel channel, right? So right here, you see the little moon, and I'll pull this up here. So I'll put a line here, and this is where the moon indicator said there's money coming in, right? So right there.
So typically a green moon is bullish and blue moon is bearish.
Right. Because so we actually, when we trade the moons, we trade into the moons because the moons will cause a spike. And then once the spike happens, then you move out of your position, because that's pretty much the catalyst to the reason why it spiked. Okay? So I'm going to put the 3 white indicate arrows on the moons, and then I'm going to put where the 4 hour actually started bending up. And I'm going to put that one at the color, let's see here. I'm going to use pink. And this is where the moon indicator actually started bending up. So like the RSI, this is where we got a 4 hour that started up. And when the 4 hour starts up after having a long selling period, this will basically let us know that at this point, this is where we need to be a little more mindful of the possibility of a long position. And then I'm going to mark these here real quick so that we can see where we have confirmation that we're going to get some type of movement. And then here I'm going to put the white indicators here just so that we know that there's a moon there. And then we'll go look at this chart on a smaller time frame. All right. So now I'm going to slide down to a 2 hour. Find this area here. And then you can see, so we'll start with the first one here. So the first indication is right here. So the first thing that we get is we have the red indicator that starts the movement up, right? So you see this candle here. You have a spike here on this one candle. See this? It goes all the way up there. Let me see if I can. Where my candles at? What are the settings on there? There we go. Okay. So you see how this spiked here? So we got a spike that actually went up to here. And that was from when the red started to head up, right? Then here's the white, here's the moon, which happened on this candle. So this is our first spike. I'm going to turn this white so that we have it. That's our first spike. That's when it starts to go up here. That's our first indication there's a movement up. Then there's a pullback, and we get the moon over here. Now, if we look all the way across, we can see that that's now a target area, you see? Now on the pullback, this pulls all the way back. We can see that if we're looking at our support, see how we have this yellow support line here? We can see that based on this area here, we have a support area here, right? Then on the white moon or the green moon that comes in on the 4 hour, which is this area here, this candle here, right? That's what let us know that it would actually be one candle over. So I'm going to move this one candle over. It'd be on this candle here because there's always a delay. You'll see the following time. So you would see on this candle here or this candle here would be your moon indicator or your alert. So you'll get an alert here, but you'll see the moon here, right? Now, you already know that you're in an uptrend. You see that there's a pullback. Now you're aware that there's support and resistance on this yellow line, right? So you're in a position where you know that when this starts to pull back and you're going into a moon, that you would be looking to buy or put buy signs on this support area, because that's the support that most people are going to put limit orders on, right? And where we're going to is from the original spike, we're going to the top of this resistance. So that right there is an easy way to trade a 4 hour trade with the moon indicator. And that right there gives you a nice 4% move. Now,
yeah, damn. I need to practice that, because that sounds like some sauce.
Yeah, but see, yeah. This is that's what I'm doing right now is I'm building your strategy for you, right? So now, based on that, that's kind of like the simplicity. So now what we have is a basic. When you see a 4 hour moon hit a lower level bottom, like it did, around a 25.30, and it starts to bend up, whatever the push was, that becomes the target of the next move. And what's the next move is simply the 4 hour moon. So then the 4 hour moon would be your indicator to know that you're going to start moving in the other direction again. So on this pullback, you know, you already put a support line in, and you already know that, okay, I'm looking for a pullback, and on the 4 hour, this is probably going to be the pullback area somewhere in between here. So it'll be more like, that's the normal support line right in here. So what you would do is you would have something like I'm going to give you some sauce here. All right, so you would have an area from the lower part, and then you'd have the lowest part, right? And this area here, this is our buy box, right? This is our buy zone, right? You see it? So here is, I'm going to give you something that, okay. So this is going to be a buy zone, all right? You know that it should pull back to here. You know that there's going to be an area probably in the middle of there, and then there's the lower part of this earlier candle, right? So this is kind of like your buy zone, right? So you would be, most people would put the buy on top of that box right there, because they know that if it doesn't go all the way down to the bottom, they're going to miss the trade. Now, how to trade this, right, is that as it's starting to come down, you know that from your, let's say all this candle didn't exist and we're just watching this uptrend, and we see that it's starting to pull back finally, right? And on that back pullback, we're like, oh, we're waiting for the 4 hour moon, right? So on this pullback, as it's starting to make its way down, we could easily calculate, right? We can take our long position, we can go calculate that, okay, if it pulls back to the top of this support that I'm looking at, and it goes back up to the resistance, that's a 4% move, right? So now that I know that, I know my possible movement. I'm going to do 50% of that, which is my 2%, right? Which is where we lose 50. And then half of that is 1%. So I'm living here with a bottom layer saying to myself, okay, if this does a 1% move, how do I make money there? Now I have to calculate my leverage, okay? The second part of this that people forget is, once you have a area that you're going to limit order in, you then have to measure the pullback to the lowest previous candle, which is a 1 point, let's see what this is. would be here. And let me measure this out. So on that, you can see that that ends up being, when you look at your percentages on the red, that ends up being a 0.8 pullback. You see right here? That's the downside, you see? So it's 0.62. Let me zoom in for you. So on the red zone down, if I was going to the lowest candle, right? Meaning that this is going to be where I'm going to think to myself that if it does pull back, this is the lowest support that I've seen. Okay? You see how this candle's over here? I decide that this is my lowest support area right here. See? And then I measure that, right? When I measure that, it tells me that I'm working with a 0.64, right? Which is, 0.5% pullback, right? So what that means is whatever leverage I decide to use, I have to calculate a stop loss that would at least go all the way back to worst case scenario of my 0.64. That make sense? So that means if I was doing a 100x, okay, and it pulled back to 0.64, that means I would have a 64% loss.
Yeah, that makes sense.
Right. So that means if I did a 50x there, now I'm toying with about a 30% stop loss, right? So now I got my loss in perspective. Now I go back to my win. I need a 1%, right? I want to make at least 30% on my money, right? So if I have $1,000 and I say, you know what, I want this to be a $300 trade, right? Because you have to have simple parameters, right? The goal is to do this: master making 50% trades, so that making 30 is just what you do naturally. That's why that makes sense? That's why sometimes in the Discord you see me post a 12% win, but it's worth $800. It's because when you're trading $3,000, I don't need 30%. I need 10% and I make $300. So if I can do that 3 times a day, that's $1,000.
Yeah, bro. And the more you build capital, it just gets easier and easier.
Exactly. So you have to trade as if you're trading with $5,000, $2,000, $3,000, $4,000, so that you don't need to get to 50. But if you have built a strategy that was designed to make 50% and on average make 25% every single time, well, then making 15% ain't shit. That makes sense? So now that's how you get rid of your risk, because you don't need 50% of your trade, you need 25% of your trade. It's what it's going to do every single time. You see what I'm saying? It's your worst case scenario. So now when I measure this down, I know that if I did a 50x here, I'd be 30x. But if it went up 1%, I'd get my 50%. Now keep in mind, the original trade is supposed to go up 4%, right? So half of that is 2%. So my middle, basically what it's probably going to do is 2%. My worst case scenario is 1%. So if I had a 50x leverage here, I'm going to get at least 1% regardless. That's 25% of the possibility. So now I can say to myself, you know what? Let me do a 40x leverage, and that will guarantee me a 30% or at least a 25% guaranteed on a 1% move. But that also gives me the ability on a 40% leverage. That means this stop loss here, when it pulls back, only pulls back to 25%. So then I can put a stop loss here at 35% and give myself that extra 10% of room. You see what I'm saying? So in reality, I'm running a stop loss that could actually go down to here. Right, let's say if it was running 30%, right? 35%. This would be a 35% stop loss. See? So I have all this room extra for worst case scenario, you see? So I could survive that.
Yeah. Do you have a rule though for your risk to reward on the trade you take? Like, do you care if it's negative or?
Well, yeah. That's what I was gonna say. Like, so, the one thing that I've kind of noticed that what I've been working on is like how to, and this is there's actually, I'm gonna do a course part of a master's course of entries, right? And I posted a little bit in the Discord about it, but it's a course I'm going to give on how to what I just showed you here, how to double that, how to create extra safety. But what I do is this. For me, it's like once I measure this all out, I've already calculated 50% of the loss and gave myself extra room to lose, so which increases my odds of success. So then once I set the trade, the odds are heavily in my favor. And so what I want to do here is, like, out of 1,000, I would only want to lose 300, 30%, because I want to win 7 out of 10 trades. So let me fix this right there. Okay, I'm back. So I want to win 7 out of 10 trades. So if I lose 3 trades at 30%, that's equivalent to 1 trade. So I'm 6 out of 10.
Yeah.
And those
in the long run, you'll be fine.
Yeah, and those 6 out of 10, I'm doing 30% on. Most of them, I'm going to do 60 plus. But just to keep it on you don't want to over exaggerate your possibilities. You want to play the humble role, so that way you're never the rest of it's just cherry on the top. When you start trying to be the guy who can do 100% every time, that's when you become the guy who never makes any money. You see what I'm saying? So I'm always calculating 30. So if I can win 6 trades at 30, it's 180%. So at the end of the day, if I'm doing 10 trades, 5 trades a day, or let's say 3 trades a day, every 3 days, I make 200%. So if I have $1,000, every 3 days I made $2,000. So I'm not over trading. I'm waiting for the correct scenarios, and then I'm calculating the best entries, and I'm putting myself in a position to win, not lose. And this is where, when you learn to calculate this, I'll give you a little sauce here, is that you ever see me you'll see me in the Discord talk about be greedy on the entry, right?
Yeah, you say that all the time.
All the time. And the reason why is because of this. It's just philosophy. If you're not greedy here on the pullback, and let's say that you think that the support is going to be up here, and you decide that this candle over here, which is taller, is the area that you're going to buy, right? And you go, okay, I'm going to make sure that I don't miss this trade, and I'm going to buy here. And I go to the one that's further down, and I say, you know what? I like having this lower one, so my buy order is here, right? Doesn't seem like a lot, but when you measure it out and you kind of put it in there, that's about a 0.7% difference, right? Which means
that's money, man.
Yeah, that's money. So let's say that you hit this trade, and let's say it falls back and it does this pullback to where I'm at, and and remember, I'm still having extra room where I can go even further back. But you try to get in a little bit early, so you take that there. If that's a 30x leverage, you're about 20% down, right, before it goes up. And if it drops down to my entry, well, which would be down here, which is my safety net, now you're looking at a 1.2% pullback. More than likely, you probably got stopped out, right? You're taking that risk. Now, the thing is what I tell people is this. Now, if you take my entry, which is going to give you an extra 25% gains, let's say that out of 10 times, 5 of the trades doesn't go all the way down to me, and they end up going up like we're supposed to, and I miss those trades. And you get into those trades, and out of those 5 that don't pull all the way back to me, you catch those 5. But on the other scenario, the other 5 that went down to me and even further, you got into as well, but those ended up stopping you out. So what happened is, even though you got 5 trades that I didn't get in, the 5 that you lost actually cost you more than the 5 that I got in. And that's why you don't make as much as me. Because by being down further, when I win, if this goes up to 1%, you end up making 30%, but I got an extra 25 to 30. So I make 60. So I make twice as much on the 5 trades that I got in versus the 5 trades that you got in. Does that make sense?
Yeah. That's crazy, actually.
Yeah. See, that's why I have master classes.
Yeah. So what you're trying to say basically is that you're not afraid to miss out on trades. You know, you want to get your perfect entry,
Mm-hmm.
and you know,
Yeah, because
if you miss a trade, it's not a big deal.
yeah, it's going to come right back. Right? What happens if you miss a trade? It comes back in retest.
Yeah, exactly.
Every entry on a retest you missed is just another confirmation of where it's going to retest, which is going to happen where, let me look, it's going to keep coming down. It comes down to here, right? Here's an entry, here's an entry. It goes up, here's another entry, right? It constantly does the same thing. It comes down. That's why we have channels. It goes up, it comes down. Here's another entry, right? And eventually you're at the point where, oh, I missed this entire trade. Then what do? You short it. Then you get over here and look what happens. Look at all that you make. Look at that short. It's ridiculous.
Yeah.
You see what I'm saying? So that is what you have to, when you build your strategy, build it a way that it calculates the mathematics in your favor. When you get into a trade, you may just remind yourself that when I'm in a trade, I make twice as much as everyone else. So I don't need to worry about missing a trade that wasn't perfect, because the next trade will pay me double. And what you'll find out is that, let's say you're trading and you do, so let's say 10 trades. So just give me a guesstimate. Out of 10 trades, how many do you win and how many do you lose?
Me personally?
Yeah.
At the moment, I'm definitely negative. I'm not profitable. Probably win 3 out of 10.
Okay. So
Maybe
now by doing it my way, you'll avoid 4 of those trades that are your losers, and your 3 winners will be double.
That's crazy.
You instantly fixed your trading.
Yeah,
you instantly became profitable, and you didn't do shit except become greedier on the entry. Now, if you add a very simple indicator like the moon indicator to give you confirmation of when you should be in a trade, right? Back in the day, I used to just teach people a very simple thing where you pulled up an indicator called the stochastic RSI. And what I used to tell people is like, hey, man, if you don't understand anything, the least you can do is trade with the people. So every time you're trading, when the 2-hour RSI, see the bottom over here, the RSI right here, when it breaks above the 20 line and starts to go up right here, notice that that's the same entry point. So that's where you would be entering, trading with the people. So it gets you in that same scenario. It just lets you know that you're trading with the sentiment, meaning that it's going up. Now, personally, to limit risk, you go to further out, you go to the 4-hour. And when you go to the 4-hour, that means that you're just waiting for all the chaos to end. And then you can see down here when the 4-hour starts to break up and it breaks above the 20 line, that puts you here, and that's where you get these bigger movements. Then it goes back down, it breaks above the 20 here, you get a spike, right? So if you were trading this just like a normal person, you would be catching these little spikes on the 4-hour RSI, and you'd be making your 1% moves over and over. Boom, 1%, 1%, 1%, all day long, right? You'll still be, hovering around your 6 out of 10, but you're at least trading with the momentum. And that's how simple it is to have a basic strategy. The moon indicator is a little bit different because when it heads up, it's heading up with money. And money means it's not just people interested in a coin, it's the fact that they're actually purchasing the coin. And this is where you calculate that with support and resistance, and all of a sudden you formulate a strategy that you can rely on, right? Knowing that, okay, if I see volume inside of a trade that's starting to happen, and I'm on a support or resistance area, then I can turn around and go, oh, it's coming down, but I've got, here's our line right here. So I know that there's a moon in here, right? And because I know there's a moon here, then I know that since this is a support line here, this orange support line's there, I know that I'm going to get a jump because this is telling me money's coming in at this support. Now, if there's no money at that support, then I know it's going down. And then what I do is I just look for the next support until the money shows up. That's
Right. Is that indicator like custom, like a personal one for you, or is that can anyone have that?
yeah, well, yeah. If you're in the so the only thing with the indicator basically is set up to where if you're inside of the Discord and you because we do all our copy trade and everything, but if you have a BitNext account and you put your BitNext user ID number in the Discord, then you get the indicator.
Oh right, I haven't done that yet because I have the BitNext account, but I don't have the indicator. So
Yeah,
I'll do that.
yeah. Did you use our link to sign up?
Sorry, say that again.
When you signed up for BitNext, did you use our VIP link? Yeah. So
Originally, I was trading on Blowfin, and I was speaking to you on the Discord. You told me
yeah,
to get
yeah,
off Blowfin and
yeah.
use
Blowfin's
BitNext.
terrible,
So
bro.
I tapped your link and I signed up.
I'll be honest with you. If you get out Blowfin, you'll probably win two more trades.
Yeah, damn.
They have so I was I used to trade on MEXC, and then MEXC kind of went they kind of start freezing accounts with all the BS KYC, and then I was like, yo, you can't freeze our accounts, we're in the US. So I had a big fallout with them, and then Blowfin was like, I had a buddy at Blowfin was like, oh, you gotta come to Blowfin, man, they got this new platform. I tried them for about 3 weeks, and I was like, hey man, these wicks are terrible. And they were like, well, that's because our MMRs are here. And I said, man, you can't do that. That's it. You're basically, you wicked me out at 40% stop loss when it's supposed to be 70 for liquidation. Like,
Yeah,
so
yeah,
I left that
yeah.
right away. I was like, all right, that's not going to work. So I left Blowfin because everyone's like, hey, man, I can't believe I lost that trade. It didn't even go down that far. And then I was tracking them, and I told them I had a big talk with the developers. And they're like, well, that's because our MRIs are set like this. And I'm like, well, that's not, you're not supposed to, you're supposed to actually make it the other direction. If you want to do anything, you should give us more leeway. I mean, because we're trading here. You're making money off our trades anyways. You don't need to liquidate us. So then I went to BitNext, and they were like, I mean, super like candles never wick. I mean, I tried them for a year and a half, and I was like, yo, this is better than MEXC. So then I came to him. I was like, all right, man. I said, I'll trade on here, with all these things. That's why we went over there. It's because it's just way better, cheaper fees. They give us stuff. They give away stuff all the time. I'm like, man, this is way better. So I like the fact that we're over here making money, but we're also supporting the crypto industry, and they make money off crypto. So we should get prizes, giveaways. I mean, we should get cash back. I mean, we're the reason why they're in business, and they're very good about that. So that's why we did that. Yeah. So just in the Discord, you'll see a little section for the indicators, and in the indicators, it'll have indicators, and let me see where we have it. Indicator info, and that says user ID number and trading view name. So just go in there and put your it'll say indicator info under BitNext cashback. Open it up and then put your user ID number and trading view there, and then you'll get
Yeah,
admins
so
will give
I'll
you
do that
access.
now.
They'll get you access to the indicators for free. But yeah, so does that make sense on the strategy wise?
It does. It does. It all makes sense. It just now I kind of just need to practice it to actually understand when to use the indicator and that sort of things. But I really appreciate, honestly, everything you've told me has been awesome. Like I never really thought about taking profit 50% of where you think it's going to go, things like that. So and the risk management. So
Yeah, so that's
yeah,
what I'm
man.
gonna do. If you'll see inside the Discord, I'm gonna put a course up, and it's gonna be more about solving this because sometimes you'll have something that you're trading, and then it's like, you know what, if you just did this extra, sometimes you just have to do a little more of like understanding how to be more greedy, and sometimes people just can't be more greedy. And then I was like, over the last couple month and a half, I'd be like, you know what, we should do this type of trade here, will eliminate that fear of not being in, but also give you better entries. So it's a way of actually getting you an entry point and then a second entry point that pulls back, even if it pulls back on you, and you still are in a very good position, but it allows you to be more comfortable with, taking a trade. But I mean, at the end of the day, when you just look at the supports and you realize there's no money there, just go down two supports. If you miss the trade, you miss the trade. I mean, but the trades that you do hit are worth twice as much as the trades you missed. So
Yeah.
And what I'm going to do is I'll go back, and this will be on YouTube, and I'll throw this in our Discord. But I'm going to go back, and I'm going to start this strategy with you here, and this is going to be the 4-hour strategy, where you can kind of see the development of like, okay, 4-hour bends up, there's a pullback, 4-hour moon, I have an entry, right? And then that'll be the foundation of a strategy for you to look at and go, okay, now I understand what I'm looking at when I'm looking at the 4-hour. And then you combine that with the charting, which is the support and resistance areas. And then you'll know when a support and resistance area is actually going to hold. And then you'll know when a breakaway is actually coming. Because when the breakaway starts to come, you'll be looking right at your moon indicator going, and this is kind of like, okay, you see here on the 4-hour, this is in the middle of the 4-hour is the 0 line. You know what I'm talking about right here? There's a 0, yeah. So that 0 line, I'll turn that into a 4 and make it orange right there. That line is basically positive volume. So when you see the volume, so you see how here we have a positive spike, and then we go real negative. And then right here we get one more spike, and then we start to work our way up, and then you see how we positive, and now we're positive, and now we're positive again right here. So you see, I'll show you 4 points. So here's your positive move. Then when it went negative, it came right back up, and now it's like higher highs, higher lows. So you see the higher volume there on the 4-hour, and then you see right here how it holds above the 0 line, right here. So when it holds above the 0 line on the 4-hour, you see that right there? This yellow line right here is the 0 line, you see? So when this broke down here, it jumped, but this time it held, which means when that held, the very next candle, which would be here, this is our entry point. Let me straighten this out right here. So that would be our entry, right?
So right now you're anticipating a moon.
Right. Because that we're trading into the moon. You'll hear me say trade into the moon is because that's the spike. So right here, we would be entering this right here. Now notice that this is also a point, if we were watching this, we could see that the chart has broken through its resistance right here, right? So now where most people like a Calvin Hill would have to sit here and wait for this to decide that this is going to be resistance, where we already see on our indicator that it will be resistance, that the resistance will become a breakout. So right when this candle turns green, we'll be buying into this section here. So while everyone's waiting for this retest, which is basically coming back up and retesting again somewhere down here, we have already jumped in the trade. So by the time they see it, they'll be entering this trade up here. So we'll have a difference of 6%. So think about that. If you're doing a 10x leverage, that's 60% on your $1,000.
Right.
See how that works? So the 4-hour, you see how the 4-hour was making volume positive, right? So here it did positive, and then it went negative, and then it went positive, and it went negative. Then it went positive, and here's the first time it held positive, and now it's heading back up. That's our entry.
That actually makes a lot of sense. So basically, let me just get this straight, right? So you're looking for a drop that stops above the 0 line,
right,
before pointing up.
Right. We're looking for the retest of the money to stay positive. But we're also looking for it on the 4-hour time frame, right? And this goes time frame by time frame, because a 4-hour means that we're probably going to get a 10 to 15% move. So then we can go for 6%.
Yep. Because we're just looking for that 50%.
Right. Now you can use lower leverage and still get your 60%. Or if you're using, like me, 40%, well, now you're sitting at 280, 300.
And that sounds a lot more simple than it looks. Because when I see sometimes you post your charts on Discord with the indicators, I'm like, man, like, what is that? It looks kind of complex.
No, right. It's the same thing as a candle, except it's money. So we're waiting for the retest of the money to be positive so that we know it's strong enough to make a move. Right? So each mound, or each time the money goes up and down, it has a percentage that it moves. So when it gets to a certain level higher than the zero line, those percentages go up. Instead of a 1% move, 2% move, 3% move, now it's a 6 to 10% move. So my risk is way down if I'm only looking for a 1% move. You see what I'm saying? Because the worst case scenario is 6.
Yep. And is it the exact same thing on smaller time frames?
Yeah, so if let's say we break this down, we'll leave that candle there. Let's say we go down to the 1 hour, right? That's why I say when you start like developing a strategy, the strategy is the same. You just have to go and check out like where you're going to apply this in the time frames that you're going to apply it on. So let's go and find this white candle here, this white arrow. All right, so we can see here that we have this breakout here. Here's the channel that it's trying to break out of, right? So now we look at the indicator, the moon indicator, right? You see how on the 1 hour we've had positive volume, went negative, right? Comes down to the 30 line, comes back up, positive volume, breaks down again, right? Here, positive volume, right? And look how it held right there, see? See how that's all positive there? It's all above the zero line. Yeah. And that's the best time to get your entry for that long.
Yeah, man.
That makes sense?
It does. It does. Definitely does.
So that's what will be like, kind of like, boot camp on Monday. There's a bunch of people in the boot camp. We'll go over this, but that's really what, sometimes, like strategy-wise, don't forget the way to set up a strategy is 50-50-50, right? Half and then half of your half. Now, once you have that down, right, then you got to find the strategy that works in those parameters, right? Because then no matter what happens, you're still going to be successful. So right here, you can see currently on this move here, if we go to our moon indicator, we can see that right here. See how the positive volume, Doge just started to hold, you see? Right there. Positive volume, see how it's holding on the 4 hour? That's the beginning of this.
So does that technically mean that would be an entry for a long?
Yeah, this is where we'd be looking to go long, because we're starting to get this positive. Now we go to the 1 hour.
Long trade, but yeah.
Yeah, go to the 1 hour. Now we're in the same scenario. So the only thing you would do here is that once the 4 hour shows support, you would want the 1 hour to head up. And then if the 1 hour bounces here and shows support off the zero line, that's where you would enter. Because and remember, what we're doing here is even though the 4 hour tells me to enter right now, I want the 1 hour confirmation.
Okay. So you always go down to a small time frame for the confirmation.
Right, yeah, because I want the best entry. Smaller time frames give us closer moves. So I want to make sure that I'm trading with the 1 hour support. Right? So right now the bigger time frame just tells me what's coming, but it doesn't it's like, think of it as a massive, ocean, and you're trying to find the one raft. Well, we go to the 1 hour so that we're in a lake. So now I can see it better.
Yeah, it makes sense.
So when the 1 hour bounces, when this 1 hour goes up, it comes back down and it bounces. So when this 1 hour has its rejection, it comes back down and starts to go up. That's our entry for Doge. And if it doesn't and it keeps going down, then that allows us to sit back and wait for the 4 hour for it to happen, because what will happen is it might end up where the 4 hours from now might reverse and start to head down. Now we know we're in a short.
Right.
Make sense?
Yeah, definitely, man.
All right. I just wanted to hop on tonight and grab somebody real, like I was about to go do something.
And then I really appreciate it, man. Just honestly, that little chat with you has opened my perspective a lot. I would love to take a class, like whatever classes you offer, or chat to you again. I'm happy to pay or whatever. But,
yeah, we'll have
to do something with you, man.
Yeah, we'll have the look for it. I'll put it up in the next, probably tomorrow. I'll put it up. It'll be the master class, and it's just the basics of understanding, simplicity of how to just think, right? And eliminate all the things that you're thinking wrong and just think about what you need to think about, right? Like, what's my best entry? How to use support properly? And what support's going to hold? And then creating a strategy that you can look at and be like, oh, that's not my strategy. Oh, let me wait. That's not mine. Okay, let me wait, right? And then at least you have an ideal of like, you're not rushing for trades. You're starting to learn how to set up the best trade. And then once you start getting into trades, you'll be like, oh, you know what? I could use that to get that other trade. You'll start developing steps that you'll see with your own brain that will make sense to you, which will make you a better trader because it makes sense to you. See what I'm saying?
Yeah, makes sense. Yeah.
So I'll throw this. I'll throw this on Discord in our area to everybody to watch. But that's basically the breakdown. So we'll chat a little bit more. I'm gonna hop off here, and you kind of go over how to build your strategy. So we'll go back to the 4 hour using the 1 hour as the entry, and the 4 hour as your confirmation to a trade. So that when you find a trade that you can have confirmation to, then you look for the 1 hour to create the entry for you.
Okay.
So hop in the Discord, put your user ID number there so they can get you the indicator, and then tag me at VC admin.
No, man. My name's just Akeem in the Discord. I'll do that
I
right
saw
now.
you, man. Yeah, I remember you because you were trading on Blowfin.
Yeah, yeah,
Yeah,
yeah.
I was like, hell, get off there, bro. That's probably half your losses. But yeah, we'll get you set up, man. Get yourself moved over to BitNext, and then yeah, just post your thing, and we'll get you set up tonight.
Awesome, man. Really appreciate the chat, and Merry Christmas. Have a
Yeah,
good
Merry
day.
Christmas, man. We'll talk soon.